according to my specifics, then you'll be able to use it properly, and then make sure that whatever that you do yields out very good returns, and then you're consistent, and you make it very simple. You own it, because the point is to make it simple and own it. Understand? So let me just conclude this section. I believe we're done with exponential and moving averages. So right now we're gonna go into Fibonacci. We're gonna look at Fibonacci retracements and extensions. So let me just take a quick break. So coming back to the Fibonacci retracements and extensions, I just want to show you my golden Fibonacci retracements and extensions, ladies and gentlemen. Like as you see, it's the 38.2, the 50%, and the 61.8, and then extensions are 127, 141, and 168. So without wasting time, let's go to our charts. So uh, in terms of Fibonacci, I'm very precise and clear. I only trade the Fibonacci, golden Fibonacci retracements and extensions. So my golden retracements are 38, 50, and 618. Understand? So let me just okay. Let me check out my Fibonacci expansion, how that looks. I don't have it there, which means it doesn't look very good, but it's cool. Let me just go to 30 minutes, 1 hour. Yeah, let's use the 1 hour. 30 minutes. Yeah, yeah, let's use the 30 minutes. So like I said, the 38%, 50%, and then the 618. So let me just draw that real quick. You know what? Actually, let me just use the Fibonacci expansion. I think that is much better. Okay, let me just where is that? There it is. Insert. Yeah, there it goes. So I'm just gonna do that. There's the 100%. So I'm just gonna edit that real quick. So the 618, 0 point 38, 38.2, 0 0.50, 50.0, 0.618, 61.8, and let's go further up. Let's see what do we have up there. We have only 161, so we're gonna have to enter 1.41, then here it's 141, but it's 0, and then here it's 1.27, it's 127.0, and there we go. So I have my Fibonacci expansions there. That's my 100%. So I want to be taking positions along this area, so 38, the 50, and the 618. So let me just do that real quick. Yeah, I think it's good. So if I take a position here on 38%, let me just look for one that is very precise. Yeah, I'm just gonna put it there. Yeah, I think this is proper. So this is from X, this is A, B, C, D. So I want to take my positions between the 618, the 50%, and the 38.2. So this is what I want you to take note. If the price comes to 38.2, then we're gonna take our target and 127. Or actually the 618, because this is supposed to be the 618. This is the 50%, and then this is the 38.2. So from 38 point, from 618, we go to 127. From 50%, we go to 141. And from 38.2, we go to, let me just put that back there, we go to 161. So let me change that color into green to illustrate that it's going up. Yeah, so that's how it goes. And then let me just put the red line to show that it's a reversal. So let's just say you've noticed that we are expecting a reversal from this area here. You wait for a retracement for a 56 for 38 50% or 618, and then this is where you would take your positions. You understand? And then you should know, you don't just, if you don't, because these are my golden Fibonacci retracements. So let me just do that in color. Yeah, this is my golden Fibonacci retracement. I wanna trade from these levels. And then if I take a position anywhere in these levels there between the 38, 50 and 618, this is the areas. Okay, let me just remove that. If I take a position there, these are the areas that I'll be looking to take my targets. Just gonna change that color into light gray color. So there we go, ladies and gentlemen. I take a position 50%, taking my target at 141. Take a position at 618, taking my target 127. 38.2 to 161. 38 to 161. 50 to 141. Let me just also do that. Yeah, there we go. From 38 to 161. From 50 to 141. From 618 to 127. Understand? So, but for you to take a position first, you will look at the retracement. Let me just remove that. Look at the retracement. You got the 50% there, or the 50 or 38% retracement. So now you wanna take a long position. So what you do, you wait for that 3 and 13 moving average crossover. There it is. After seeing this, then you take a position. What date was this? This was 2nd of November. And then, okay, let me just, 31st of November, 29th, the 30th, the 31st, 1st, the 2nd, and the 5th. So this was Friday. Understand? This was Friday. It's in line with the trend. So this was basically Friday. The midweek reversal: 1, 2, 3, 4, 5. Monday, Tuesday, Wednesday, Thursday, Friday. So you took a position here because it's on that 800 moving average, in line with an uptrend, on that 50% retracement, and you have that 13 and 3 and 13 moving average, first moving average crossover. You take a position and then you take it long. That's how I do my Fibonacci retracements and extensions and retracements. So let's look for one last example on another pair, pound dollar. Yeah, going south from here. So let me just remove all that. So remember, I take the 50 and the 618, the 38% 50 and 618, 38% 50 and 618. So let me also remove that. That's my Fibonacci. There it is. So when I look at this retracement here, and then this one as well, from that high, from that one there, there's nothing much there. We'll just trade from this, from because of this moving average crossovers, and then there's also like not crossovers, this uh, trend hitting moving average crossover. So we don't have any significant retracement there. This one, you have the 23.6, and that was the 38.2. So after taking this 38.2, I know my target is 127. So from here, my target is gonna be, okay, let me just use the expansion. Actually here, yeah. So this is the 38.2, this is the 50% 618. From 38%, my target is 127. Then from 50%, my target is 141. And then from 618, my target is 161. Take my targets there, and then I wait for another retracement. So now that I've entered here, and then I took my targets, let's remove that. Look into the following day. Fibonacci from the previous high to the low. We got another 38.2. 38.2 from there. We look into taking another target at this is not 38.2. It's actually 618. From 618 to 127. First target. Uh, Second target, and the third target at 127, at 161 rather. You see there, it's a very good setup. You see it. So Fibonacci is also very good. And then remember, when you spot a Fibonacci, good Fibonacci retracement, that is in line with the trend. And then you just wait for your confirmations, like your trend 18 moving average crossover, because that's the first crossover that we get before the price, really continues and with whatever trend, whatever direction that it was going towards. So in this case, what do we have? We only have 50%. So you get a nice 50% retracement from this low. Price from this high, it went down here. From then on, it rallied, it ranged. So when it's ranging like this, we expect the price to give us a stop and high to stop out people that sold and put their stop losses at just 25 to 50 pips above the size. So after having noticing there's also 200 moving average crossover, moving average bounce there. So that's our entry area. So we're gonna look into taking short positions because it's between the 50 and the 618, and the 38.2. So let's just draw those lines again. From 50%, our target is 141, and then from 618, our target is 161. Did it hit our 161? Yeah, just by a pip, just by a mere pip. So let me just zoom it in. Let's see. Yeah, just by a mere pip right there. You understand? So that's how you go on about it. So I believe with regards to let me just go back to the slides. With regards to the Fibonacci, I hope we clear. You don't just trade any Fibonacci retracement on extension. You need to be precise as to where to make your entries and when to take your targets. So, like I said, from 618 to 127, from 50% to 141, from 38.2 to 161. So I guess we good with that. So right now we're gonna do the TDI, the average daily, week, and the weekly ranges, and the work time will know to GMT. So TDI. Let's get into TDI. Um, I have some work here. Okay. Okay, let me just pause that for a second. Okay, so for TDI, we're gonna look at the three major things: the market sentiment, which is the market baseline. We're gonna look at the overbought and oversold conditions, which we use the price line and the signal line, the green and the red lines, and also gonna look for divergences and divergences. So without wasting time, let's get into it. I already have some work that I've done on the on TDI, so let me just go to the actual work. Okay, not this one. You know why not this one? Because this is counter trending. It's going against the trend. As you can see, the moving averages are going up, and then this is a Tuesday stop on tie. So instead of taking the short position against the trend, nah, 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 that's not it. So I would encourage this one because you can see the trend is going up. The moving averages are pointing upwards. You can see they're coming from 200. It's a little bit looking upwards. But then the main thing is here. It's the Thursday. It's the Thursday midweek reversal. You understand? It's Friday actually. So we expect the price to reverse here. But the most important thing is here. What do we have here? Do we have oversold conditions on the TDI. So when it's oversold, which means the price is trading below or not below on the 37, between the 37 on the 32 or a little bit below. For me to say that a market is oversold, it should be trading below the 37 support and the 32 support lines. You understand? In between or below. But anything over it is not really, oversold for me. I need to have a very good, precise oversold or overbought conditions. So that's an oversold condition right there. What else do we have? We have a shark fin. Here's a shark fin low. It's a shark fin because we have a sharp move of the price line on the downside, and then it comes back and crosses with that signal line. So we have the crossover with the signal and the price line. Remember the price line is the RSI line. It represents whatever that we see here. So each and every single move that's here, it's the price line, that is that green RSI line, and there's the signal line. So when you see a crossover happening between the price and the signal line, you know that's a very good entry signal right there. So what else do we have? Uh, we have a lower squeeze now. We don't have that, but it says market baseline, price line, signal line, and upper volatility band trading below the 50 line. So okay, this is what I'm referring to here. You see how this upper volatility blue line, it's trading below the 50 line. The 50 line is the line that is that thin line that cuts off the above part and the lower part. Meaning, if everything is below this line, it's oversold, uh, or it's just negative market sentiment. You understand? So this is how it goes. We have three things here. We have oversold conditions. We have shark fin low. It's not really much blood in water because I prefer my blood in water to be this the signal line to touch the whether it's the upper or the lower volatility. Then I would say that's a blood in water. This is blood in water because it's like red in blue. So that is how I explain my blood in water. But for now, there's no blood in water here. So that's what we can only see with regards to this. You Now you can see, like, because of I said it's in line with the trend. So we're trading in line with the trend. We've seen how the moving averages have crossed over there. We see it's a W formation low. We see it's a Friday midweek reversal. And what else is the New York and it's London and the New York session. We also have TDI there. We have oversold conditions. We have what do you call this, price and signal line crossover, and then we also have shark fin low. So that's a good thing there. The other thing that what we have also in this one, it's obviously we're not looking at market makers, but then we're not gonna trade TDI without looking at market makers. So what we have here, we had on Monday, we have divergence. Look at that big divergence there, because they diverge. That is going up and this is going down to signify that the market has no momentum of going up. The sellers are committing more positions as opposed to buyers committing more positions, taking it long. So there are more sellers as opposed to buyers. As you can see, the market is moving momentum here before we can see it on the chart. So otherwise, with this divergence, you could have been able to take a position here on Monday, knowing that it's the last month of the week. It's the last week of the month, and it's potentially the high price of the month, and it's Monday. So if you don't have the courage to take it, rather wait for a proper Tuesday stop and know that it's proper time to counter trend. Plus, we're also seeing this reversal candlesticks there. You have dojis. If ever, if it's not doji, it has to be what do you call this? Twitter tops. Yeah. So what else do we have here? We have the divergence. First, we have is it a shark fin high? No, it's not really. But we also have another divergence here. If you can look here, the price is going up, and then here it's going down to signify that this is an exact area where the price is will now start to reverse. So you see how this shows us like this divergence here, it's going down and here it's going up. It signifies that around this area here the price is about to retrace, but within this day you also need to get that precise entry area. So we're going to look at within that day, or we can see we also have a smaller divergence there, a shark fin high and a divergence. That shark fin high there was during the London Open. This evening star was the London Open. You understand? So it issued another pin there on New York Open. So to just stop the ones that already had short positions, and then the price, went down. So after trend 13 moving, after not trend 13, what am I saying? So after that, price and signal lights cross over, then you know it's right now it's about time. So when you start seeing this, and then the price is giving us this shooting star, you take a positions there and then you kill it. You understand? And then the following day is the same thing. Now that the price, look at what happened. You got the trend 13 moving average crossover. The price went down, and then it's like everything crossed over. Trend 13, it's like trend 13 and 13 and 15, 15 200, but it's not the moving average, just this ones. So it's the price and signal line, and then after the price signal and the market baseline. The following day, price comes back, comes to retest that crossover. Do you see how we had a crossover here, and then price came back and retested that crossover? That's a huge sign of a sell there. We had a sharp fin high, and then look at what the price line is doing. It retests that market baseline. This market baseline is very important. This MPL, this yellow line. So after that, you get another crossover between the price and signal line. You re-enter again because you took another position here. You re-enter again here. Understand? So let's move to another one. Um, okay, this was the first week of the month. This was March. I think it was 2016 or 17. So why are we buying here? Because it's Friday midweek reversal, and then obviously as you can see, you have a harmonic pattern that is completing right there, and then this is potentially lowest price of the month, but then definitely lowest price of the week. We have half a Batman. You have an ear. There's our ear there, and then what else do we have? It's London Open stop and low. So we're good with our market makers and technicals. Right now, let's go to TDI. So what do we have on TDI? We have what we call a lower squeeze, and we also have oversold conditions. So from me, this is extremely oversold because the price line is the market baseline, the price line, and the signal lines, and both the volatility bands are really squeezed below or just near that 32, 37, and 32 support line. So for me, that's a huge red flag. So I'm gonna need to wait and properly look at this. When I see something like this, then I know it's a lower squeeze. So a lower squeeze, it's when all these lines are squeezed on the bottom side. So when they're like this, you're gonna get a sharp move to the upside. If they are squeezed on the upside, we call it an upper squeeze. Then you're gonna have a really sharp move to the downside. So when you see the squeeze to the downside like that, you should expect an up movement. If they are squeezed on the upside, you should expect a downside movement. So uh, there it is. What do we have? Do we have divergence? No, we don't have any kind of divergence there. We only have the sort of a very shallow what do you call this shark fin, a very shallow shark fin to the downside, and then the signal the price and the signal line crossover, first crossover, and the market baseline crossover. So after this, then when it's confirmed like this, having crossed over all of them like that, it's the same thing as 50, 200, and 800 moving average crossover. So when they crossed over like that on your shorts, and then you see another crossover there on your TDI, then you know it's a very good entry area. Also given that this is potentially the lowest price, and you can see how much this went upwards from this point. So basically this was the lowest price of the month. You understand? So what else do we have? It's almost the same. It's exactly the same thing over and over and over and over. So the other reason, like as I said on the other video, that it's not like we don't trade Mondays. We do trade Monday. The only time we trade Mondays is when you have a valid, completed, high probability pattern, maybe like a category 2 or a category 3 pattern. You understand? Then you know it's a high probability paying pattern. When you get there, you kill it. You understand? So this was a very good one. To start with, let's look at the market makers. This was obviously Monday, the accumulation phase, but then there's also like a harmonic pattern that completes there, but it's not written here. It's a harmonic pattern that's completing here. Before we go to Tuesday, we're only looking at this. So looking at there, and then you see this divergence on the TDI there to start with, and then secondly there's a shark fin high on that New York Open. It's not New York Open, it's New York session. But then with just that divergence there, it's very crucial. We can now see that the price is going down because it's now late in Monday, the last session of the day. So and then there's a harmonic pattern that's completing there, and then this is also the last week of the month, as you can see. So we're expecting a reversal because this is the last week of the month. So each and every like on the last session of the day you expect a reversal, on the last 2 days of the week you expect a reversal, on the last week of the month you expect a reversal, you understand? So this was also the case. We are expecting a mid-month reversal, you understand? So divergence, we good. We take a small position, wait for Tuesday, Wednesday. In London we don't get anything, we relax. New York Open, we look at our TDI. Okay, what's happening right now? In terms of technicals, we had left shoulder ahead and the right shoulder. And I look at this right shoulder. The right shoulder is not able to take that left shoulder, and then it's also not able to take out that high. So which means the market doesn't have any momentum going up. And look at how the TDI is pointing downwards. And then look at this also, this high squeeze. So basically, what we're seeing, it's I don't know how to put it, overboard, very overboard conditions. Yeah, I think that's how I should put it. And then too much positive market sentiment. The market baseline is, for me personally, if ever it's overboard, it needs to be between 63 and 68. But then if it crosses above 68, then I know it's way overboard. I'm expecting a reversal very soon. Market baseline doesn't it doesn't overextend itself a lot like that. You understand? It moves within 63 and 37, moves somewhere between here. But then when it's like this, and then it's an upper squeeze like that, and you already got that on Friday, then my friend, I'm telling you, you kill it. You kill it when it comes back like this. There's a crossover, first crossover, and then crossover of the market baseline. It comes back, it retests that crossover like 15, 200 moving average crossover, and then price coming in back and retesting 200 moving average. This is exactly the same thing. It's just that in this case, we're looking at it on a small scale. You understand? So moving average coming to crossover. You see that crossover there. First crossover, second crossover. Price comes below, comes and reaches that crossover. The support comes back and resistance, then goes below. You kill it. Right there, right there. You enter, you take it short first. When it comes here, you know it's level 2 safety trade, level 1 safety trade on the TDI, level 2 safety trade on the TDI. Then right, this is a home run. You kill it. After this, it's a confirmed entry. Price signal and price and signal line crossover right on top of that market baseline. So it's a very huge sell right there. So continuing, another one here is Monday. This is the best one because we have a W formation low on the TDI. We also have, and it's Tuesday. Remember, it's Tuesday. You have a W formation low which is in line with the trend because the moving average are pointing upwards. You also have divergence there, a small divergence. Look at the left leg. It's higher than it's a little higher. The right leg is lower than the right leg, but on TDI it's totally the opposite. So what we have is a shark fin low on that New York Open. Remember, London didn't get anything, but